We start with online retail giant Amazon. It was broken its own record sales yet again after the strongest holiday season in its history. But it's predicting a slowdown in growth, and that news has rattled investors who sold off shares in after-hours trading. Let's show you some of the numbers because they are staggering. Amazon made revenues of over $72 billion in the 3 months to the end of December. Now, that was up almost 20% on the same period last year. $3 billion of that was profit, also a record. Amazon now has 100 million US subscribers in its Prime service, which gives access to on-demand movies as well as free delivery. To put that into perspective, Netflix has barely half the number of subscribers in the US at 59 million. The company hit $1 trillion in stock market value in September. Despite a sell-off since then, though, it's currently the world's most valuable company, ahead of Microsoft and Apple. But Amazon has warned that growth will slow in the coming months, as Dave Lee reports from San Francisco.
Amazon has had a very strong quarter, but investors are looking forward with a bit of nervousness because the company has admitted that its growth is beginning to slow. This is happening for several reasons. Firstly, and this will seem completely obvious, Amazon is enormous, and so these big percentage increases in growth are becoming more and more difficult the more valuable the company gets. Secondly, the company is now more concerned with making more profit than it used to, and so is making perhaps fewer acquisitions and embarking on fewer new ventures, which of course are a big source of growth for the company. Thirdly, some of those acquisitions it has made, such as Whole Foods, have been in areas that by their nature have slower growth generally, and so that could be dragging down the rest of Amazon as well. Dave Lee, BBC News in San Francisco.
Well, joining us now is Natalie Berg from NBK Retail. Thanks very much for joining us, Natalie. Now, Amazon just reported in lots of ways its best quarter ever. In lots of other ways, its worst quarter ever as well. The fact that both of those statements can be true at the same time sort of speaks to the dichotomy at the heart of this company.
Yeah, absolutely. We saw a deceleration in revenue growth, slowest growth since 2015. But when you look at profitability, it's actually a really strong quarter for Amazon. And I think we have to remember that Amazon chooses profitability. It's very much a choice for them. And the reason why they had such a strong quarter from a profitability perspective is because they scaled back investments. So retail margins were a little bit higher than normal, around 5%. And also, it shows that the higher margin businesses, AWS, its cloud computing division, which is really the cash cow of the business, and increasingly advertising are really beginning to bear fruit.
Let's talk about those two areas, the web services and advertising. As you say, two of the biggest sources of expansion, two of the most profitable areas of the business. Do they have enough juice left in the tank, should we say, to really power the ambitions of Jeff Bezos?
Well, I think there's still a long way to go. And we have to remember that Amazon isn't a retailer. They are a technology company at heart. And increasingly, they're becoming a service-based company. They're the infrastructure. And I think that's helping to buffer, of course, the lower margin retail division. And that's why they are such a force. AWS has just gone from strength to strength. We saw 45% growth in the quarter. It really is the breadwinner of the business. You know, they produce very cushy margins the division produces very cushy margins of around 20 to 30%. So it's a good fallback for Amazon. And I think we really have to keep our eye on advertising because this is proving to be a bright spot for the business. And, you know, Amazon has created the world's largest e-commerce platform. Half of all e-commerce sales in the US go through Amazon's platform, and now brands want visibility. So there's an opportunity there.
Absolutely. It was really interesting that for the first time ever in Facebook's results, they actually named Amazon as a competitor when it comes to advertising. One thing I wanted to talk to you about is the business model, because shareholders are starting to really grumble that Amazon always deploys all the capital it makes into more expansion. And that's how, of course, Jeff Bezos and this company has got this far. But can it continue to do that, use that strategy when growth is slowing?
I think they have a long way to go. I think, you know, longer term, there are some challenges facing Amazon. You know, they aren't immune to the broader challenges facing the sector. But of course, they are the disruptive force behind a lot of those changes. Longer term, as they become more powerful, more influential, they're going to face government scrutiny in the US and abroad. And I think we could see the introduction of things like a digital tax, We just saw that introduced in France. It could become European-wide in a couple of months. We could see an overhaul of business rates here in the UK. So I think government scrutiny and the prospect of antitrust is a real threat to Amazon. But also, as they move into more services, particularly on the consumer side, banking, healthcare, home security, the list goes on. I think that we might see a consumer backlash and consumers eventually say, actually, enough's enough. Too much Amazon.
Too much Amazon. Who knows? Natalie Berg, thank you very much. And on that note that Natalie was picking up in terms of scrutiny, there is a story, it's an exclusive in the Mirror today. Amazon has paid just £62 million in corporation tax in 20 years. That's less than Marks and Spencer's has paid in one. This is after $7 billion in revenue.